This is Alan Bush with ADMIS. In the stock index futures, we are seeing lower prices this morning. Some of this pressure linked to news that some of the economic data out of China did come in weaker than expected in the form of a purchasing manager's index. Over the last 4 years, we have seen good gains in the first trading day in January. However, that appears not to be the case today, with futures under some pressure. Although, in light of all of the accommodation in the banking system, in spite of the Fed's plan to scale back their quantitative easing plan this year, I think that we will see a recovery in stock index futures from where we are now. So even though futures are lower, look for some recovery gains, possibly trading higher on the day later this afternoon in stock indices. Also in the foreign currencies, seeing the dollar index advancing. It appears to be overreacting to the news. In fact, there was very little news that would affect the dollar index, but there is some talk that the dollar will be supported by rising short-term interest rates here in the U.S. This due to what appears to be a recovery in the U.S. economy. Also, if the Fed continues on their path to scale back their quantitative easing, that puts upward pressure on short-term U.S. interest rates and in turn will help the dollar. But overall, in the last month or so, I'd have to say the dollar index has underperformed the news. And I think that will be a situation that continues well into this year. We are seeing some pressure in the euro currency, even though we did have Eurozone economic numbers coming in stronger than expected. Some pressure in the pound after factory output in the UK coming in on the weak side, and some pressure in the Australian dollar, which was linked to the weak Chinese economic data. Over in the treasuries, we are seeing somewhat lower prices in the overnight trade. In fact, we did have the yield on the 10-year note rising to a 2-year high. Since then, there has been some recovery. Since the consensus view is that the Fed will continue their scale back of QE this year, I think that is likely to put pressure on treasuries over the near term. However, I'm thinking maybe in the second quarter that there is a possibility that momentum in the U.S. economy will slow as a result of rising interest rates, and that could reverse the trend in treasuries. But over the next month or so, look for more of the same. Treasuries likely to continue to drift lower. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.